Lebanon, a small country located on the Mediterranean Sea, home to roughly 5.5 million people, Lebanon could be considered one of the most desperate countries in the world today. The World Bank stated that the economic and financial crisis is likely to rank in the top 10, possibly top 3, most severe crises globally since the 1850s. As you can see with this graph, between 2019 and 2020, food inflation has rose 400%. It has defaulted on much of its foreign debt. Hyperinflation has made its currency worthless, and we are seeing huge amounts of food insecurity as millions are struggling to afford even the most basic necessities. And a brain drain is happening as many who have wanted to leave have already done so. It is estimated that Lebanon has lost 20% of its population in the past 5 years. This is extremely concerning as studies are confirming that a declining population will have a negative impact on the economy. Currently, Lebanon is in what is called as a terminal brain drain. Even before the current economic collapse, in an assessment in 2020, the World Bank warned that the brain drain was becoming an increasingly desperate option in Lebanon, as the economic crisis ranks in possibly the top 3 most severe crises in the world since the mid-19th century. Professionals providing essential services such as doctors, nurses, and engineers, as well as academics and entrepreneurs, are reallocating to different countries. It's not hard to see why so many people are leaving. In the past 4 years, it's estimated that 80% of Lebanon's population has entered poverty. Lebanon has lost nearly 50% of its GDP in the time span of a couple years, from 52 billion in 2019 to 23 billion in 2021. Even Ukraine, although not the wealthiest country, has lost less economic output than Lebanon, despite being invaded by Russia. So why exactly is Lebanon completely collapsing? Up until 2017, Lebanon was actually doing quite well, or at least looked like it was. From 1990 to 2000, Lebanon quadrupled its economic output. Although starting at a very basic level after a 15-year war, it's still a very impressive effort. In the 2000s, Lebanese banks were even viewed as a desirable and safe location to hold cash. However, by the mid-2000s, Lebanon had a debt-to-GDP ratio of 183%. This was one of the highest rates in the world at the time. Normally, when you speak about lots of government debt to GDP, it is viewed as a bad thing, and it can be. However, there is another side to this. The government has to get its debt from somewhere, and the people giving Lebanon's loans were investors that believed in the future growth plans of the country. This suggests that Lebanon's economy was growing, which means that this high to GDP ratio was not caused by the country taking a lot of debt and then losing output. It was caused by foreign investors lending money to fund the country's ambitious plans. Many countries need to take on increased debt to grow. However, during this period, the country was vulnerable to economic shocks, both within the country and by global events. By 2018, Lebanon was seen as a potential success story. Still not super rich, however much better than many of its neighboring countries. Despite growing and looking like an apparent success story, the country was increasingly vulnerable. In 2018, cracks began to become apparent, and the ongoing civil war in Syria and tensions within the region spilled over to Lebanon. This caused a huge humanitarian crisis. 1.5 million refugees inundated the border within 1 year. This was such an intense population shift in a small country that it can be seen in the population graph. Additionally, you can see a huge drop-off of what comes next. Various companies began to become impacted by sanctions due to the ongoing conflict in the region. For over 25 years, the Lebanese banking system seemed sound. However, these US sanctions began to reveal worrying cracks. By being pegged to the US dollar when issues arose, many attempted to withdraw funds in USD. The government didn't have enough money to honor these exchanges. The currency broke its peg, collapsing on foreign exchange markets. Other account holders had serious worries that the government would come after their own savings by taking money directly out of their accounts. This resulted in mass bank runs. It got so bad that the local Lebanese even started to rob their own banks to get savings out. The government attempted to raise funds by increasing taxes, which then resulted in mass protests. Tourism then disappeared overnight by COVID. We had the huge port explosion that made over 300,000 people homeless. Today, mass hyperinflation is making the Lebanese pound virtually worthless. Inflation in Lebanon surged to 171% in 2022, the highest in nearly 4 decades. At one point, its inflation rate was at the highest in the world, beating other states such as Zimbabwe and Venezuela. In its latest report on food security around the world, the World Bank said that Lebanon recorded the highest nominal food price inflation rate in the world through February 2022 to 2023. Total unemployment is nearly at 50%. Even just in the past couple of weeks, we've seen mass protests around the country, with gas stations, banks, and roads constantly closed. Lebanon's economy is in an absolute ruin. The future looks very bleak for its population, which now faces a very tough future. One could very well argue that Lebanon today is a failed state.